What if big banks and the Federal Reserve were hatching a plot to buy back XRP in secret? Just picture yourself waking up one day to discover that XRP's value is far more than what it trades for now due to a fixed price established by banking institutions. The future of XRP in the international monetary system is supposedly being discussed behind closed doors by influential figures. Is it possible that XRP is a strategic asset, rendering it crucial for the functioning of banks around the globe? Should it be the case, might they try to repurchase it to control the supply? A massive buyback would indicate XRP's significance in the future of finance, according to many in the crypto community, who think the coin is worth far more than it is now. But why is no one talking about this? How will the Federal Reserve's plan affect regular XRP holders, and what is it anyway? We need to know if banks are preparing to seize control of one of the world's most valuable digital assets, and if this possible repurchase is real. For a long time, financial experts, Ripple insiders and crypto fans have speculated about the possibility of an XRP repurchase. The principle of a buyback is straightforward. Governments and central banks in particular would like to regulate the supply of XRP if it turns out to be an important asset in the international financial system. In contrast to the decentralized and mined Bitcoin, since XRP is based on a unique consensus ledger, international transactions are completed more quickly and efficiently. Some see XRP as a potential bridge currency for the new financial system due to its efficiency. But what makes financial institutions and the Fed interested in repurchasing XRP? Experts agree that institutions would have to buy a lot of XRP before it could be widely used if it were to become an integral part of the financial system. Another potential use of a repurchase is to consolidate control. XRP should be held by financial institutions rather than individual investors. In the financial markets, buybacks have traditionally been employed when an entity determines that an asset is strategically valuable or is undervalued. According to this hypothesis, XRP might be worth far more than what it is now trading for among institutions. But why is XRP considered such a valuable asset? And what part does it play in the banking industry's future? In the international monetary system, let's investigate its possible applications. XRP is being positioned as a crucial tool for global transaction, and its importance in the future of banking is not merely speculation. With XRP you may send money across borders instantly and for a little cost, unlike with traditional banking systems that use antiquated technology and have long settlement times. Because of this, it is perfect for financial institutions seeking to update their networks, such as banks, remittance businesses, and even central banks. Hundreds of banks and payment processors around the world have teamed up with Ripple to incorporate XRP into their platforms. Because of its real-time liquidity, XRP has the potential to facilitate frictionless and efficient worldwide transactions by acting as a bridge currency across various national digital currencies. Here is where big banks and the Federal Reserve enter the scene. Financial institutions will require a solution capable of processing high-speed transactions independent of the antiquated SWIFT network if a worldwide transition to digital payments is unavoidable. There has been a lot of talk regarding institutional accumulation and possible buybacks of XRP because it is well suited to that job. Some think that banks could buy a lot of XRP from existing holders at a set price if they wanted complete control of the supply. What, however, would this imply for regular investors if it materialized? Will retail holders be compelled to sell their shares? Might they stand to gain from an astronomical price increase? How would a repurchase affect XRP holders? Let's find out. An important turning point may be in store for XRP holders in the event of a buyout. One side of the coin has the potential to cause a huge price spike, enabling early investors to cash out at a far higher price, thanks to a structured buyback by financial institutions. A planned buyback price might be established at levels well beyond the current market value, according to some beliefs, at prices per XRP that go into the hundreds of dollars, or possibly the thousands. Financial institutions and governments may be prepared to pay a premium to ensure they have a say in the supply of XRP if it is deemed a crucial financial tool. On the other hand, buybacks could potentially reduce the influence of individual investors. Institutions may enact regulations that restrict the ability of individuals to own or trade XRP freely if they seek complete control over the cryptocurrency. An important question this begs is whether XRP holders are compelled to sell their tokens or given the option to hang on for future gains. What about retail investors? Would they have any voice in the duration of a repurchase if it happens at a fixed price, or would financial institutions dictate it? Because of these unknowns, the buyback theory is both intriguing and worrisome. The fact remains, however, that if monetary authorities and banks regard XRP as the foundation of the next monetary system, they will exert all effort possible to regulate its distribution. However, regulation is a crucial issue that must be considered before all of this can occur, in order to determine the fate of XRP. Now we may explore how a possible XRP buyback could be sped up or halted, depending on the clarity of the law. Even in a hypothetical buyout, regulation would remain the primary hurdle to widespread XRP adoption. Ripple and the United States is still embroiled in a legal dispute.